Stop! If you bought this stock yesterday, you need to watch this video right now. This is BigBear.ai, ticker BBAI. After their earnings dropped, everyone is screaming AI stock is taking off. But I'm here to tell you, you're missing the crucial point. Because I found a dangerously inflated number in their financials. This number shows that BBAI stock is actually worth more than double its fundamental value. Most channels will just tell you they beat revenue, but my analysis never stays on the surface. Today, I'm going to use the simplest math to show you the valuation bubble in BBAI. Why am I so certain? Because their PS ratio has hit a level you would never believe. Stick around, I'll tell you exactly how the CEO plans to spend their $500 million cash pile and what you are really betting on if you buy today. Let's look at the four most important numbers. Revenue. They reported $33.1 million. The analyst consensus was $31.8 million. A beat. But here's the kicker. This revenue is still down 20% year over year. This is a growth stock that is moving backwards. That's red flag number one. EPS. They lost 3 cents per share, which is better than the expected loss of 5 cents. Another beat. But the fact remains they are still losing money per share. Core profit, adjusted EBITDA. A loss of $9.4 million. The loss is widening and gross margins are shrinking. This tells you their core operations are burning cash. The huge positive, cash. The company has nearly $585 million in cash and investments. This massive cash hoard is their single greatest asset and their lifeline for this turnaround. The report beat expectations, which caused the jump, but the fundamentals are still weak. Shrinking revenue and widening core losses. So what did the CEO say to convince everyone to ignore the weak fundamentals? The answer is strategy and future vision. This is the big bet. First, the Gen AI acquisition. They announced the acquisition of Ask Sage. The goal is clear, to pivot aggressively into high-margin software products using generative AI and dump those old low-margin service contracts. This explains the spike in SG&A expenses. They are burning cash to transform. Second, the big payday. The CEO specifically pointed to 2026-2027, anticipating a generational investment from the US government into AI. This is a multi-billion-dollar, decade-long strategic spending wave. BBAI's entire cash and acquisition strategy is about getting a piece of that enormous pie. But wait, what about the competition? What edge does BBAI have over Palantir or Anduril? Edge 1, domain expertise. BBAI has years of experience deep inside defense and intelligence agencies. They know how to securely and seamlessly integrate AI into the military's old complex systems, something tech giants struggle with. Edge 2, decision focus. BBAI's core tech is decision intelligence. Their AI isn't just a tool. It tells the military, here's what you should do next. Edge 3, financial stability. $585 million in cash provides the long-term stability needed to bid on and execute huge, multi-year government contracts. The message from management. Ignore the current struggle. We have the cash, the strategy, and the domain knowledge to win the biggest AI contracts of the next decade. The vision is compelling, but let's crash back to earth. The stock is trading at a PSS ratio of merely 19 times. Guys, this is the definition of a valuation bubble. For a company with shrinking revenue and negative core profitability, that number is insane. Based on my models, if we give it a generous 8x PS, which is what a rapidly growing software company gets, and add all its cash, the fair value is around $2.43 per share. At over $5.70, the current stock price is more than double its justified valuation. You are paying for the complete and total success of their Gen AI pivot years in advance. My final take is simple. Exercise extreme caution. Buying BBAI is a high-risk, high-reward, speculative gamble. You are betting that the company will outmaneuver Palantir. It will successfully secure those massive generational investment contracts by 2027. It will rapidly eliminate losses and jump to plus 50% revenue growth. If any one of those points fails, the stock could crash 50% or more. Unless you are a speculator willing to endure huge volatility, I suggest waiting. Wait for proof of revenue growth, or wait for the market to calm down and the stock to return to a more rational price below $3. What do you think? Is BBAI the next AI unicorn, or is it a valuation trap? Let me know in the comments. Don't forget to subscribe, and I'll see you next time.